In the previous week, the trading in the rupee was confined in the tight range between 74.30 to 74.45, the high and low for the week being 74.23 and 74.5450 respectively. Due to an improved risk appetite among global investors, rupee is trading with a steady undertone against the dollar. The huge dollar inflows from pre-IPO Zomato issue, IPOs already completed, and more IPOs coming in the next 1 month period or earlier have all helped the rupee to stabilize around 74.30 to 74.50 range. The stability in the exchange rate has provided comfort to the importers who had earlier expected a rapid decline in the exchange rate above the 75 level due to concerns on worldwide coronavirus cases. The forward dollar premium for August and September maturities have significantly dipped to 20 paisa and 44 paisa per dollar respectively. We strongly recommend the importers to hedge their August import payables targeting a spot level of 74.30 and a spot target level of 74.15 for hedging the September import payables. The dip in the forward dollar premium levels up to 2 month maturities, combined with the benefit of an acceptable spot exchange rate, shall provide the importers a favorable forward exchange rate for settlement of import payables. From financial year 2015 to financial year 2021, the average rupee depreciation was 2.96% per annum, and this broadly represents the inflation differential between India and our major trading partners. The lower annualized rupee depreciation at 2.96% witnessed in the above period can be attributed to the inflow of huge current and capital account flows into the market to balance the dollar demand, which led to a slower and gradual appreciation in the home currency. In the current financial year, we expect the rupee to depreciate by 4 to 4.50% on an annualized basis, translating into a level of 76.45 to 76.80 at the end of the current fiscal. The market expectation of the rupee for end March 2022 is also close to the above mentioned levels. Moody's Analytics said exports will once again be the foundation for a recovery after the second wave of COVID-19 left a lasting damage on the Indian economy. In May and June 2021, exports performed well with over USD 32 billion in each month, raising hopes of fulfilling government's target of USD 400 billion in exports in FY 2022. The IMF has cut India's growth projection from 12.5% to 9.5% for fiscal 2021-22 as the impact of the second wave has slowed recovery efforts. Rupee can derive good support from foreign fund inflows of the upcoming IPOs for about USD 3 billion in the next 1 month period. Exporter selling in medium-term maturities is also one of the reasons for the strong receiving interest in the swap market. The forward dollar premium up to 6 month maturities broadly represents the interest rate differential between USD and INR for the corresponding maturities. The 3 months Forward dollar premium ended the week a lot lower at 3.80% per annum. The forward market differential between the 3-month and 6-month maturity has contracted sharply to about 0.18% per annum. Fed announced the central bank decided not to rise interest rates from near zero nor adjust the pace at which it buys government bonds each month. Stocks turned slightly higher after Fed chairman stated that the US economy has not made enough progress for the central bank to dial back aggressive support for the economy. Fed chair also said a rise in COVID cases due to spread of the Delta variant may not have a significant impact on the economic recovery. He expects inflation to remain above the central bank's target level in the months ahead, but that is not enough to cause the Fed to change its policy stance so far. The US 10-year yield is trading lower at 1.25% after the Fed offered no details on the timeline and mechanics for tapering and stressed risks to the outlook remain. Bond yields fell more than 20 basis points for the month so far, and the 10-year bond yield fell for the 4th consecutive month. The spread differential between the 10-year and 2-year yield narrowed to 104 basis points.